On May 30th, 2008, Goldman Sachs Asset Management launched the Goldman Sachs Absolute Return Tracker, or ART Fund. The Goldman Sachs ART Fund is a U.S.-registered mutual fund that seeks to achieve results that approximate the performance of the GS ART Index. Created by Goldman Sachs International, the GS ART Index attempts to track performance achieved through exposure to the market risk, or the ups and downs, of hedge funds as a broad asset class. Please note that the ART Fund is not a hedge fund and does not invest directly in hedge funds, but instead invests in a variety of asset classes designed to approximate hedge fund returns. Why attempt to approximate hedge fund returns as a broad asset class? After 2 decades of double-digit returns in the 1980s and 1990s, the U.S. equity and fixed income markets have experienced an unprecedented decline. This reality is compounded by a growing number of investors who are rapidly approaching retirement and searching for ways to minimize portfolio risk and preserve their assets. Now more than ever, investors need exposure to more diversified investment options to help them attempt to meet their goals. In the changing investment landscape, hedge funds have also suffered. However, the ability to invest in a fund designed to approximate the overall returns of hedge funds as a broad asset class can enhance diversification and potentially strengthen performance, even through bear markets. Historically, hedge funds as a broad asset class have offered the potential to deliver more consistent returns over time than traditional equity investments, and potentially low correlation to the equity and fixed income markets. For example, during certain periods, hedge funds in aggregate have delivered favorable returns when stocks and/or bonds had sustained periods of weak performance. However, hedge funds are not available to most individual investors. Some of the challenges to investing in hedge funds include high minimums, manager-specific risk, leverage risk, limited transparency, and regulatory and reporting inefficiencies. Hedge funds also carry liquidity risk, which many investors can't afford to take. Liquidity risk stems from lack of marketability of an investment that cannot be bought or sold quickly enough to prevent or minimize a loss. Hedge fund liquidity risk can be derived from both the constraints of the hedge fund investments themselves and from the types of securities owned by hedge funds. However, academics and investment professionals have argued that the attractive risk-return profile of hedge funds as a broad asset class can be made available to investors in a more accessible and liquid format. Asset managers have drawn upon this academic research to create innovative investment solutions designed to replicate the overall returns generated by hedge funds as a broad asset class. This research is based on the discovery that the risk from exposure to the ups and downs of hedge funds as a broad asset class can be separated from the active management risk that individual hedge fund managers take, such as making security selection and timing decisions.
Well, more than 4 years ago, the Equity Derivative Strategy Group at Goldman Sachs did some research, and that research concluded that the returns of hedge funds or of a fund of hedge funds could be attributed to very common market factors or market exposures. So things such as equities or fixed income or currency or commodities or volatility. Importantly, this research suggested that hedge funds as a broad category or market exposure could be replicated. So implicit in that is that there is a possibility to disaggregate the beta exposures of the market for hedge funds from the alpha associated with a portfolio manager's skill or expertise in security selection or market timing. And it's really that disaggregation of the beta component of the hedge funds that is the important premise behind this notion of hedge fund factor replication. Ibbotson recently concluded that 75% of a hedge fund of funds return could be attributed to the beta exposure as opposed to alpha.
Recognizing the opportunity this dynamic could potentially offer to investors, Goldman Sachs Asset Management launched the Goldman Sachs Absolute Return Tracker, or ART Fund. The Goldman Sachs ART Fund is not a hedge fund. Rather, the fund seeks to achieve results that approximate the performance of the GSAM index. As mentioned earlier, the GSAM index attempts to replicate performance achieved through exposure to the market risk or the ups and downs of hedge funds as a broad asset class. The GSAM index uses equities, commodities, fixed income, credit, and volatility indices to achieve exposure to the universe of investments that comprise hedge funds. Within the Goldman Sachs Art Fund, the following investments, among others, are used to provide exposure to the components of the GSAM index: futures, swaps, ETFs, commodity structured notes, stock, and cash securities. Ultimately, the Goldman Sachs Art Fund has the potential to deliver the benefits of hedge fund performance as a broad asset class with the liquidity of a single mutual fund investment. Based on the fact that the Goldman Sachs Art Fund seeks to approximate returns of hedge funds as a broad asset class, the full spectrum of benefits the Art Fund can potentially offer investors include potentially lower volatility relative to the equity market, diversification relative to traditional asset classes, potential for positive returns in a variety of market conditions, no leverage, daily valuations, daily liquidity, simplicity of a 1099 form instead of a complicated K-1 form for tax filing purposes. Despite the many potential benefits of investing in the Goldman Sachs Art Fund, please note that the fund does not represent a complete investment program. The fund's net asset value may fluctuate substantially over time and entails a high degree of risk that is not suitable for all investors. Please go to the end disclosures for a summary of primary risks for the fund. Although not suitable for every individual or institution, the Goldman Sachs Art Fund has the potential to meet the needs of a diverse set of investors. Please see the disclosures at the end and discuss the appropriateness of the Art Fund with your financial advisor before investing, and be sure to read the prospectus to learn more about the fund. Ultimately, expanding allocations beyond traditional investments to include the Goldman Sachs Art Fund can potentially offer two key benefits: more muted ups and downs in portfolio value due to the fund's diversification characteristics, and strong return potential for the overall portfolio. If you think that the Goldman Sachs Absolute Return Tracker Fund may be the right fit for your portfolio, please contact your investment professional for more information.